So, hello everyone. We'll start the session. My name is Vikas Agrawal. I'm the founder of AIF and PMS Experts India, and this is the show of Ask the Expert, where we invite industry experts and we understand and read their mind. So, we have organized many sessions on equity markets. This is for the first time we are organizing sessions on fixed income portion. So, as you know, that fixed income is the segment which is perhaps the largest in India and amongst the top five markets of the world, and it is growing year on year. So therefore, we thought, generally as an investor, what comes to your mind is when you invest in fixed income, either you do a direct fixed deposits and get about 5.5-6% returns, or you invest in fixed income with help of mutual funds. Now, today we'll have essentially discuss about how to participate in fixed income markets with help of AIFs. And that's the topic. And the topic is how to bear volatility in fixed income with credit AIFs. So we'll talk about that also. So we invited Mr. Irfan Mohammed from Vivriti Asset Management. Well, Irfan brings about more than 9 years of experience. He's IM from Bangalore and he's also completed his engineering. Before joining this organization, he used to work for Aditya Birla as a portfolio manager and credit analyst, where he was managing one of the largest fund for Aditya Birla, which is Birla Low Duration Fund. That used to be a size of 17,000 crores. And now what we'll do is we'll start the conversation. So thank you so much, Irfan, for accepting a request and taking the time out and joining the session.
Yeah, thanks for having me.
Yeah. So today what we'll do is, there are few investors, Irfan, who have joined and not too much familiar about these AIFs. So what we'll do is we'll start with basics and then build it up on the topic that we have chosen. Is that okay with you?
Yeah, sure, Vikas, that works.
Yeah. So the first question which comes to our mind is, how is credit AIF better than debt mutual funds? Because you look at most of the investors, HNI or Ultra HNI, they have maximum exposure to debt mutual fund.
Right. So, well, first of all, we have to understand what the investing process is. So, when we're investing in fixed income, you are essentially lending to a company in a securitized format. Now, what that means is that banks or NBFCs they'll give it in a term loan. What we do in capital markets is that we are also giving it a loan, but वो loan को हम trade करते हैं. That's why it's called a bond. Now, this philosophy of taking part in the senior tranche of a company, which means pehle the company's assets, the charge would be given to the lenders, and whatever remains comes to the equity holders. And that is what you invest through your Nifty and your mutual funds in equity. So this part of investing in a senior tranche of a company, this is same no matter how you invest in debt. Now, when we're talking about mutual funds, so mutual funds, the key difference is that mutual funds do this in an open fund architecture, which means they are essentially managing three levers of risk for the investor. First lever is that they're managing duration risk. So, which you would know, जब yields ऊपर जाएंगे या spreads ऊपर जाएंगे तो bond का price घटेगा and you will have an impact in your returns, and vice versa. जब yields rally हुए जैसे past में हुए second half of last decade, you would see an impact if you are running duration risk. तो ये पहला risk है. Second risk they manage is credit risk. Now credit risk is the same point that I told you, where you're lending to a company and वो company if it fails there is a cost associated with it, वो credit risk है. और तीसरा risk manage करते हैं liquidity risk. And liquidity risk is the most underappreciated bit, because liquidity risk is जब आपको पैसे चाहिए redemption में there has to be money available. तो इसलिए mutual fund will always predict what its inflows are, what its outflows are, redemption क्या होगा, कितना liquidity maintain करना है. ये बहुत आसान है, but because आसान दिखता है, but because people have not done it, we have seen what's happened in the debt mutual fund industry, right?
Yeah.
So these are three levers of risk in mutual fund. When you move from there to an AIF, what are we essentially doing? We are saying that the third risk, which is liquidity, and the first risk, which is duration, these two risks are essentially removed from an investor's kitty. So an investor who's coming in is taking in a duration risk predefined, just like how he is taking with maybe an FMP product or a fixed deposit product. So there is no mark-to-mark volatility during the tenor of his investment. So the duration risk is gone, or rather you can say it's predefined already. The second bit is on liquidity, right? Because he's allocating 3-year money. If it's, for example, you're investing in 3-year fund, you're allocating 3-year money. You're investing in a 5-year fund, you're allocating a 5-year money. Since you're already taking that risk, you're already defining that duration and you're coming in, this bit of liquidity risk is not supposed to be managed by the investment manager. So as an investment manager, I don't have to manage that. So that leaves us with a core, the third risk, which I'm talking about, is credit risk. Now, this is the only risk that needs to be managed by the investment manager. And this is how we end up investing in a credit AIF. Now, in a credit AIF, there are multiple ways of doing and investing in a credit AIF, and the asset class in itself is very diverse. But I want to tell you that essentially structure-wise, the difference is only that we are not handling these two risks. We are only taking credit risk, and our only job is to manage that well and deliver returns, right? Now, SEBI has said that this risk can only managing credit risk without liquidity and duration risk. This bit can only be done in an alternates platform, which is why the regulation that has evolved is that we do it in an AIF structure. So in AIF, you have 3 categories: category 1, category 2, category 3, of which category 2 is defined as the pure debt AIF, and that's the umbrella under which all credit AIFs or most credit AIFs operate in.
Second question is, when you compare that with mutual funds or any other fixed income instruments, how safe they are, Irfan?
Right. So again, here it's a mixed bag, just like how it is with every other investment. So I would not like to say that it is sab changa si and it's super safe. Even if you look at Nifty index fund or large cap funds, quartile 1 versus quartile 4, the difference is huge. So you would also see a variation in that here. However, तो यहाँ पे हमें क्या करना है कि you have to see what's the beta, right? Now beta means that if I'm in equity, या समझते हो कि broadly what the index is tracking and उसके ऊपर and नीचे, however the asset manager performs is his alpha or lack of it. In fixed income, maybe we are exactly looking at beta, और इसमें क्या करेंगे कि is that we take 10 or 20 year long term data provided by credit rating agencies, जहां पे क्रिसल या इकरा हमें ये बताता है कि अगर आप ए रेटेड कंपनी या AA कंपनी को आप पैसे देते हो तो प्रोबेबिलिटी ऑफ डिफॉल्ट क्या है. तो दिस प्रोबेबिलिटी ऑफ डिफॉल्ट, बस 100 रुपया देंगे तो कितना खो सकते हो, राइट, इन अ सर्टेन ड्यूरेशन. एंड दैट नंबर इफ यू सी is around 1% for A-rated companies, and for BBB companies it's about 3 to 4%. It varies if you take a 5-year period, 10-year period, various rating agencies, around 3 to 4%. So if I lend to a BBB company for over 20 years, I would be losing, if I don't apply my mind at all, I would be losing 4 rupees on my principal. This is how the risk is defined. Experienced kya hai? Experienced risk. If you look at, for example, our group, we have deployed more than 10,000 crores of capital just over the last 5 years, right? And our experienced risk loss is less than 18 bips, which is 0.18%. And we lend directly to BBB companies. तो यहाँ पे alpha का जो difference है ना बहुत ज़्यादा है. So on one end, PSUs are there which have extremely high NPS, which have gone through it and now are lending again. And on the other end, you will have people who are performing much better. There are NBFCs which lend to the same segment which perform better. So यहाँ पे variance आएगा, which is why the asset manager that you end up selecting and the asset class that you end up investing in is extremely important in credit AIFs.
Yes, I'm trying to make it a little more simple for our investors. So that's an attempt that they should be able to understand. So Talk to us about what is the underlying asset, like where do you invest money, whatever you collect in AIFs.
Right. So I'll just stick with the previous example. अब मान लो कि there is a manufacturing company जो साबुन बनाती है, right? Now this manufacturing company, if he's making soap, can get multiple lines of financing, multiple needs of cash रहेंगे. पहला है plant लगाना, right? Now when the company wants to set up a plant, he will say he'll go to the bank, and the company promoter will say, I need X crores to set up a bank, a factory, give me money. This loan, you call it capex loan, right? So this loan, if the company is large enough, promoter is decent enough, the bank will give this money. The second bit is suppliers and vendors. यहाँ से आप जब अगर साबुन बना के if he sells, there's a credit period, right? Which he gives to his customers, and supplier से ये भी credit period enjoy करता है. So this is where his money gets locked, and इसको fund करने के लिए भी बैंक की पैसे जरूरत पड़ती है. This funding is called working capital lending. अगर बहुत simply बोले जाए तो ये दो ही है most important avenues of financing for a company, right? तीसरा चीज है acquisition. जहां पे अब ये साबुन कंपनी दूसरा कंपनी खरीदना चाहता है, उसके लिए पैसे चाहिए, दैट इज एक्विजिशन. सो केपेक्स, वर्किंग कैपिटल, एक्विजिशन फाइनेंस, ये तीन है जहां पे पैसे चाहिए होते हैं. और प्रोमोटर ये सोचेगा कि इसको मैं कैसे फाइनेंस कर सकता हूं. बैंक से मिल रहा है तो अच्छी बात है, बैंक से नहीं मिल रहा है तो इक्विटी से लेना पड़ेगा. इक्विटी इज मोर एक्सपेंसिव कैपिटल. नाउ वेयर वी ऑपरेट इज इन दिस बैंक लेड काइंड ऑफ अ स्पेस, which is, for example, अब मान लो दिस प्लांट उसने सेटअप कर दी, अब उसको बेचना है, एंड ही इज सेलिंग टू Amazon, फॉर एग्जांपल, alright, or he's selling to a contract manufacturing for HUL, for example. So HUL is buying all the soap that he's doing, for example. Now if he wants working capital lines when he starts commencing production, the bank might not give, क्योंकि बैंक के पास थोड़ा टेम्पलेट्स होते हैं. 3 साल ऑपरेटिंग हिस्ट्री चाहिए, आपको प्रॉफिट जनरेशन दिखाना चाहिए. All of these sort of various rules and regulations get applied in bank financing. So this person might not be able to get that finance. So what does he do next? He's saying that I've supplied 2 crores of sabun. अब 2 crore आएगा इससे HUL से. Now, but I need that 2 crores upfront. तो ये simple discounting product जो है, ये करने के लिए you either go to an NBFC, and if because NBFCs themselves are not growing as fast, that is where players like us also come in. So यहाँ पे what we do is that हम ये नहीं करेंगे कि हर बिल को आप डिस्काउंट करो हमारे पास. We will say against this kind of receivables that you have, आप हमारे से 5 करोड़ या 10 करोड़ ले लीजिए आप हमारे लिए, बट जो भी HUL से पैसा आएगा वो हमारे खाते में पहला आएगा. तो ये एक बहुत सिंपल ट्रांजैक्शन
of taking the receivables in your account.
We are taking the receivables in our account and we escrowed it. तो जब HUL पैसा भरेगा, that gets reflected in, for example, an HDFC bank account, and that HDFC bank account is fully charged to us. So जो HUL से पैसा आएगा, पहले हम देखेंगे whether we are getting paid out or not. If once we are getting paid out, our principal and interest gets paid out, the excess gets released to the company for his growth. Right?
Is it essential to have escrow with all the lenders, or the fund decides what do they want to do?
So यहाँ पे भी exactly. So this is where asset manager के बारे में बोल रहा हूँ. So for example, we are extremely particular about having that as a part of our security structure. There could be other players जो बोल सकते हैं कि नहीं, आप मान लो कि HDFC में बैंक सेटअप करके HUL जो पैसा भरेगा वो उसका डॉक्यूमेंट में चेंज करने के लिए मान लो 3 महीने लग रहे हैं. So there could be an NBFC or another lender who takes a call कि नहीं मुझे 3 महीने के बाद दे दो तो चलेगा. So here there is a lot of variance that comes in, which is why asset manager selection is important. But key point to note is that आप अगर आंख बंद करके भी आप दोगे ना, तो you would be ending up making 10 or 12% in return, and you would be losing 4% in credit.
Yeah, I was coming to that. So
that's it.
Yeah, so I was coming to the same point. So in terms of returns, Irfan, that's a good thing that you've highlighted. So if you could share with our investors what kind of returns they can expect, because the minimum threshold here is 1 crore, right? For any investors, what sort of returns they can expect from this AIF?
Right. So first, promise which we have in our product and most other funds also do in credit space is that you wouldn't have to worry about inflation, right? All products here will definitely beat inflation, which has not been the case with mutual funds. तो पहला बात ये है कि आप जो भी inflation है, you wouldn't have to worry about getting a return which is above that in general, right? Once you move, so I would ideally like to show maybe a graph later on which talks about basically what is the space that we are targeting.
You can share, no problem. Yeah,
Or I'll share this now. Just
yeah. Please go ahead. Just go to screen sharing.
Yeah.
And click there.
Yeah. Sorry.
Yeah, I can see your screen. Correct.
Great. So the pictorially representing what we are doing. तो आपके पास MF में liquid gives the lowest returns, फिर duration, फिर credit risk. After that, there is a big white space जहाँ पे investments ज़्यादा नहीं होते हैं. Now this is the space which gives you a gross headline return of 8% all the way up to 16%. ठीक है? तो this space is what we are targeting through various products. आज हमारे पास 7 product हैं live, but in general I'm saying all the performing credit asset class in itself targets 8 to about 16%. Now it stops at 16% because after 16% आपको मिलेगा venture debt funds जो startups को fund करते हैं. Then you get distressed debt, right? जो 13 या 14 में borrow कर रहा था, but मान लो कि HUL को नहीं supply कर रहा. In the same example, he's not giving to HUL, he's giving to another company. वो company has gone bankrupt, so this guy's 5 crores is stuck. This guy is not able to manufacture more soaps. This guy becomes a distressed debt. So that return on that will be 18, 19, 20%. And obviously the third thing which doesn't need any introduction, real estate. तो ये 3 use cases को छोड़ देंगे. So most of the good risk that you can take, very, very palatable, safe risk that you can take falls between this 8 and 16%. And this is what we call the performing credit space. You know, so this is the space that so as an investor, if you're looking at the returns that you'll get, you will be able to get any return between 8 to 16% depending on your risk appetite. यहाँ पे क्योंकि हम ये define करना चाह रहे हैं कि what is the return that you're getting for the level of risk you're taking, जो म्यूचुअल फंड्स में ठीक से सेबी ने डिफाइन करके रखा है, बट ये परफॉर्मिंग क्रेडिट स्पेस में देयर इज नॉट मच क्लैरिटी. वी आर ब्रिंगिंग दैट क्लैरिटी थ्रू आवर प्रोडक्ट्स. सो फॉर एग्जांपल, आप अगर 10% का रिटर्न चाहिए तो यू वुड मोस्ट प्रोबेबली बी लेंडिंग टू एन ए और एन ए माइनस सॉर्ट ऑफ एन एंटिटी. जो यहाँ पे इफ यू कैन सी, जो 10% के साथ जो यहाँ पे क्रेडिट रेटिंग ऑन वाई एक्सिस यू विल सी, सो ब्रॉडली एन ए माइनस सॉर्ट ऑफ एन एंटिटी. इफ यू आर विलिंग टू टेक अ लिटिल बिट मोर रिस्क, then you can get 12, you can get 14, you can get up to 16%. After that, it kind of flattens out. So to keep it short, it's very product defined, right? Each product in Vivriti AMC, for example, when I'm jumping the gun, but but not just us, but a lot of investors guardrails define करते हैं, right? कि मैं, for example, 10% से ज़्यादा एक investment में नहीं लूँगा, और I would not invest below A minus credit rating criteria, just like in mutual funds. Similar things are there here also. तो आपके risk के हिसाब से आपको return आप choose कर सकते हो.
Yeah, so the other thing is, thanks for sharing the return expectation, and obviously हमारा investor से advice रहेगा कि please discuss, take proper suggestion from your advisors if you have any, or you can discuss with us. But you have to examine the quality of the asset manager, which is very, very important, as Irfan rightly mentioned. So इस पे आप इरफान बताइए कि taxation कैसे role play करता है वो, because fixed income का भी for mutual fund we have a fixed income portion tax का जो भी whatever taxation liability which comes to, which is 3 years, if you hold on to it you get indexation benefit also. So how does it work here in case of AIF?
Right. मैं बहुत सिंपल से मैं बोल देता हूँ, बस उसमें ज़्यादा nuances हैं, but just for understanding the basics, there is a category 2 AIF which is pure debt AIF, and there's a category 3 AIF, right? Now category 3 AIF में taxation is treated at the fund level. तो मतलब जो income आएगा The category 3 AIF is assessed as an entity in itself, pays tax as an entity, and post-tax returns are given to the investor. ये है category 3 AIF में. Category 2 AIF is close to mutual funds, जहां पे pass-through structure है. जो returns वहां से आएगा, that returns are taxed at the investor's hands. So for example, आपके पास as a corporate आपका taxation tax slab जैसा है, या mostly यहाँ पे HNIs and ultra HNIs हैं, तो आपके taxation के rules जैसे हैं वो apply करेंगे यहाँ पे. Now इसमें there are two things. आप अगर interest income से earn कर रहे हो, right, which will be a majority of this of what you get here, then your return would your income would be taxed at marginal tax rates, right? If you are earning through capital gains, then it will be taxed at capital gains rate, whichever is applicable to you. Now, as an asset investment manager, I would want to give you a product where आपका capital gains ज़्यादा रह सकते हैं, या I would give you a product which is return matched in such a way that post-tax returns for you with an interest income also makes sense for you to get a decent post-tax hurdle. That is part of an investment manager's product design, and we have design products just to speak about our own fund for all of these use cases.
So combination of both in a way.
So for example, we have a product which is catered only if you are having you are an HNI or an ultra HNI. And we have another product, same sort of asset underwriting, but if you are a corporate. So depending on your tax structure, we have different products. It's not like sab kuch ek hi product, which is why we are having 7 products.
Sure. So based on the client's profile. Of course, the one disclaimer here is that we are not saying that so for whatever taxation liability, you'll have to speak to your chartered accountant. So this is a disclaimer from our side that please speak to them. But broadly, the way it is treated is what has been discussed here. That's a good industry practice. But still, please speak to your chartered. The next is so what sort of what are the different types of debt AIF available for investments?
Right. So, all right, I'll take this a little differently. So again, sticking with the same point I showed you. So there are, just for this thing's sake, let me just pin that up. So,
yeah, please share it.
Sorry, I'm shuttling between this, but
yeah, it's visible. I can see that.
Right. So in this, what we are saying is that on the low, you can, like I said, आपको 8% से 16% तक का return आप कर सकते हो, right? So there are different products which are different strategies, you can say, targeting different sort of returns. Now, if for example, I am saying that for example, venture debt on the one end, right? Venture debt, this distressed debt, which is outside performing credit. उनके अगर strategy मैं बोलूँ तो startup में मैं invest करूँगा as a venture debt player, assuming that the equity value of it goes up, and that helps me make my returns as a venture debt player, right? As a distressed debt player, I'm going to take the investment, and then what I'll do is that I will make sure that the company gets working again. That soap manufacturer example, मान लो the sales is not done and then the company is not able to make more soaps क्योंकि capital lock हो गया. I will give it 5 more crores and I will make him start manufacturing soap again and then selling that and then making the company all right again so that I get a return on my investment, right? So real estate, I won't explain. What we are doing once you move into this performing credit space is very, very different. We are saying that if a company is getting bank money at a decent rate, is getting NBFC money at a decent rate, has a proven business model, is EBITDA positive, मतलब profit बना रहे हैं, right? Has a decent vintage to it. ऐसा नहीं कि 1 साल 1.5 साल का कंपनी है, it has seen cycles. अगर ये सब चीजें अगर broadly match होते हैं, then that company is something that we analyze and we say that okay, fine, we can lend to this sort of a company. So that is what our strategies revolve around. So if you see all our products, most of our products revolve around this strategy. But there are also other funds, like for example, there are funds which do only listed loan against shares. So if a promoter wants to borrow 50 crores, 100 crores against his own shares, you can get debt against that. That is a separate fund theme. तो ऐसे करके there are multiple product themes that are present here. आप ये समझिए कि this is where the largest opportunity is for India as an asset class today, because it is super underpenetrated. I will take you to basically this funding split. If we see in AAA space, mein you're saying that 70% of their debt is from capital market, mutual funds, pension funds, all of these guys, life insurance companies. They give 70% of the debt. So अगर आप आज देखोगे, so your typical Nifty 50 या उसके Nifty 50 के top quartile companies, this is how they operate. AA होके अगर A में आ जाएंगे तो 90% बैंक फंडिंग है. So capital markets are less than 10% of funding here. So most of whatever credit आप अगर यहाँ पे fixed deposit डाल रहे हो, that bank is actually lending to A and BBB companies. So what all we are trying to do is that as an asset manager, let me target this asset class जहाँ पे capital markets हैं ही नहीं. Now capital markets are not there for multiple reasons, but the reason we are looking at this is because there's a huge opportunity there. There is no alpha, like I said, that we are adding an additional return that an investor will get if I also end up doing a AA and a AAA sort of an asset, right? So that's the strategy we are kind of following, right?
So again, coming back to the same point, because that's a concern which comes from investors. How do you manage, what sort of risk management mechanism that you have as an organization at Vivriti Asset Management? And what has been your experience of last 9 years? Because people get confused with AAA, triple B and B plus, and you see all the companies which got defaulted in the recent past. All of them were rated as AAA by a couple of rating agencies. So can you simplify this a bit?
Right, you have touched a little bit of a controversial point because this is what we tell to a lot of investors, because this is the most underappreciated truth in fixed income investing, right? That all of the losses, almost all, disproportionately high, more than 90% of credit losses have come from AAA companies in the credit crisis that happened, right? So the reasons are multifold. I'm not getting into that. All I'm trying to say is that the impact of that has unduly affected people who are on the lower part of the rating, even though their performance is extremely good. So, if I were to kind of show you a little bit more about returns, so I thought I'll just take you through, a little bit. So before I move to just returns, just talk about this volatility induced by COVID and then post that credit, right? So just last 2 years, if you see, this is what I'm showing on screen is the CRISIL AA medium duration index, which means that अगर आप typical AA company में invest किए होंगे तो in a mutual fund platform, this is the kind of return profile that you'll be having, right? This is just an index, but the point I'm trying to say is that you're broadly tracking something which is there, a point which has been there in around October 21. So overall in a year, due to the volatility that is there in fixed income, you have lost out on the returns that you would have made, right? Now this is something that we will not be having because of that close-ended structure that I said. So that so the risk management, which I'll get to in a bit, is what we do after these risks are eliminated. So this duration and volatility that you see in your fixed income portfolios today, most investors, if you are here, you might be having fixed income portfolios. So that volatility is something which is out of our purview, right? The other bit I wanted to show against MF investments and explain to you guys is that these are broadly the cumulative returns over 3, 4, 5, 7, and 10 year periods across various fixed income categories. So यहाँ पे एक interesting point है. I have blocked out the names so that you kind of think about this, which category is where. So first wala line is no clue. This price for guessing that it's liquid, right? Lowest duration hoga, so it's probably giving 4% in 3 years CAGR. But the second last row item, which is actually 10-year CAGR of 8.72% and 3-year of 4.92 and outperforming across all buckets. Guess which asset class this is? Vikas, मैं आपसे पहले एक बार पूछ लेता हूँ, since you will be able to answer.
So
Second last row.
fixed income mutual funds.
ये पूरे फिक्स्ड इनकम ये पूरे फिक्स्ड इनकम के कैटेगरीज हैं, इंपॉर्टेंट कैटेगरीज, ठीक है?
Yeah.
10 कैटेगरीज हैं इंपॉर्टेंट. सेकंड लास्ट रो इज द आउट परफॉर्मर इन 4, 5, 7 and 10 year bucket. So just a wild guess what product this could be.
Credit risk.
Okay, so I'll move to the answer. It's not. So it's gilt 10-year constant duration, which means that अगर आप गवर्नमेंट सिक्योरिटीज में पैसिवली इन्वेस्टमेंट मैनेजर को बोल दो कि 10-year ड्यूरेशन आपको मेंटेन करना है and you just don't do anything else, manage it only with government securities, it ends up over the last decade being the biggest outperformer in fixed income investing. And credit risk, for example, you would see that it's at 7.9 for 10-year, right? Around 8%. Not bad, but still about 80 bips lower than gilt 10-year. What I wanted to show you here is that if you look at 3 years return of credit risk fund, it is 6.65%. It is the highest. These 3 years are the only years where investors have shied away from credit risk funds. If I see from 2018, 2019 से अब तक, credit risk as a category has gone down from more than 1 lakh crore to around 25-30,000 crore now, right? So this entire risk, entire COVID, सब कुछ हुआ है, but outperformer is credit risk fund. The point I'm trying to say here is that fixed income is a lot more complicated than people expect in an open-ended fund. Reasons are many here. मैं आपको ये तो category return है. Each fund would have done something. But the points I want to highlight is that managing duration, managing credit, as well as managing liquidity consistently well, right, is a challenging task in fixed income mutual funds, right? And investor allocation is also a problem. 2017-18 के बाद किसी ने क्रेडिट रिस्क में पैसे डाले ही नहीं, सबसे ज्यादा पैसा वहीं पे बने 3 साल में, but उसके पहले they would have put. So point is that that is where I'm trying to say that यहाँ ये चीज को अवॉइड करने के लिए ही AIF में है and performing credit point which I showed you, right? Now I will move on to how does this segment broadly look like, right? कि आप the question that you ask कि किसको हम पैसे दे रहे हैं, right? Now यहाँ पे आपको important चीज एक चार्ट में आपको, this is for consumption, but I just wanted to concentrate on one chart कि जो bottom right का जो चार्ट है which talks about average debt to net worth, कि अगर मेरा 100 करोड़ का प्लांट है तो उसमें कितना लोन है और कितना मेरा खुद का पैसा है, right? So that if you see A rated and BBB rated में it is around 1.3 to 1.6. If you look at manufacturing, it is even lesser. It's less than 1, right? So 0.7 से 1.6. इतना ही है आपका leverage once you move to A and BBB. आप अगर AAA space में रहते हैं, you would see that those companies run much higher leverage. So यहाँ पे actually logic उल्टा है कि as you move down the credit rating curve, the balance sheet is stronger. इसका रीजन बहुत सिंपल है, क्योंकि वो डेट और ले नहीं सकता है, क्योंकि बैंक्स ही दे रहे हैं, कैपिटल मार्केट नहीं दे रहा है, लोग 100 सवाल पूछ रहे हैं तो वो लेवर नहीं कर पा रहा है, राइट? बट उसका डेट टू नेटवर्थ इज वेरी हेल्थी लेवल. डेट टू एबिटा जो प्रॉफिटेबिलिटी और डेट सर्विसिबिलिटी की जो रेशियो है वो भी बहुत हेल्थी होती है. एंड इफ यू सी इन टर्म्स ऑफ एवरेज डेट टेकन, यहाँ पे यू वुड सी दैट ईच कंपनी हैज ओवर द लास्ट 5 years, if you take services, has raised 170 crores of debt only in A category. Every company on average. And BBB category में सिर्फ 100 करोड़ रेज कर रहे हैं एक कंपनी 5 साल में, एवरेज लिया. If you move to AAA category, they are investing, they are thousands of crores, right? So the problem here is extremely different of investing here, but the risk is also much lesser than people imagine it to be. Yeah, because I wanted to then to complete answering your question on our risk management. The sort of the our results speak for themselves in the sense that ओवर अगर 10,000 करोड़ में आपने 14 या 15% का यील्ड कमाया और 0.18% का क्रेडिट कॉस्ट लिया, ओके, देन देर आर ओनली 2-3 रीजंस दैट आर अवेलेबल, दैट आर पॉसिबल। एक है कि आपने few concentrated large bets लिए हैं which has paid out for you, right? This is just like equity investing only. Equity investing में मैंने बजाज फाइनेंस में 2011 में पैसे डाल दिया, सो गया. I don't have to worry about anything, right? I would have outperformed almost every other fund, and I should have exited a while back. But the point I'm trying to say is that large concentrated sixers, right? The other way I would have done is that I would have done a स्प्रे मतलब दिस इज ओवर इंडेक्सेशन. सेम प्रॉब्लम यहाँ पे मैं बोल रहा हूँ कि मैंने ओवरऑल इंडेक्स पे मैंने स्प्रे कर दिया, विच इज आई हैव गिवन टू ऑलमोस्ट एवरी अदर कंपनी आउट देयर, एंड आई हैव मैनेज्ड आफ्टर डिफॉल्ट उसका लॉसेस मैंने कम कर दिया. इसके कारण मेरा रिटर्न अच्छा है, राइट? माई क्रेडिट कॉस्ट कम है. द थर्ड वे इज वेयर यू आर सेइंग दैट आई विल इन्वेस्ट ओनली इन हाई कन्विक्शन कंपनीज, but regardless of the conviction I have, I will not take concentration risk. If you see our investing strategy across our funds, even though we are allowed to go up to 25% for each company, मतलब एक फंड में 4 नाम से मैं compliance meet कर सकता हूँ, we make sure we have 10 to 15 names in each of our fund. So till date, we have done more than 55 deals, even though the AUM that we manage is much smaller than many of the larger players. We are a new entrant, but if you look at the number of deals done, we do the most. So what are we trying to do here is that we are aggressively keeping concentration risk low, because no matter how well I'm confident about myself, I cannot let a fixed income investor suffer a disproportionate loss due to concentration risk. Isliye we keep that low. The second way we manage risk is by being extremely rigorous in our monitoring. So हमारे टीम में more than 50% of the time that we spend is in monitoring investments, which is much lesser in some of our peers. But with more than 55 deals on the table every quarter, monitoring all of these companies, and when we do that, we go and sit with the company. We make sure that we have a discussion with the promoters and the CXOs, and we will be doing any additional activities that are required if we deem necessary. For example, field visit, dealer visit, या आपको जाके customers को visit करना है, or do commence an audit on the company in itself, in internal auditor को appoint करके, if you feel that you need to see more. क्योंकि ये सब companies listed nifty 50 companies नहीं है ना, so जितना your eyes are open at night, utna safety you are able to give to our investors. So that's what we like to do, 50-60%. So because of the fact that we take concentration risk low at the beginning, and we end up monitoring our investments very closely, we are able to manage risk very well historically.
For sharing that, can you also so now that we're talking about your organization and your investment capabilities, there are some investors who have joined here for the first time. For their benefits, if you can take us through more about your details about your promoter, the CEO, and the companies. How many investment managers are there? Your overall asset under management, everything. Over to you.
Right. So just for people who have joined towards the end, what we're trying to say is that broadly, you'd have to adopt a strategy which is what we like to call MF++, right? So here it's extremely important that you choose the right vehicle, right? वहाँ पे आपको the points I highlighted to you before in terms of being open-ended vehicle versus closed-ended vehicle. So you would have to make sure you choose close-ended so that you are able to mitigate that risk. Flexibility of building loss protection means that within your fund, if there is a default, for example, या कुछ delay, is there someone else to bear the loss? If that is there, then the product is even better, right? क्योंकि in the event of some loss that can happen, there is someone to provide a protection. So that's another thing that you guys can look at. In terms of assets, make sure that we choose operating companies and sectors where the investment manager understands where he's investing in. In terms of investments, we make sure that it's going to be an accrual product in itself, right? So it's not going to be taking actively any sort of a duration risk in the fund, and we make sure that that does not contribute to any form of return attribution that we'll be having. And the idea is to ensure that there is diversification and low correlation between companies. We are able to do that mostly because of the multiple sectors that we operate in. Now, if I move to the group in itself, there are Vivriti Capital was started in 2017. So this company was started by two promoters, Vineet Sukumar and Gaurav Kumar, who have had more than 2 decades of experience managing fixed income investing, both in an NBFC format as well as in a fund format. So they've had that experience, and they've started this 5 years back, and which is where we've been able to scale up very well in a very safe manner. That today we are having Vivriti Capital and Vivriti Asset Management, which are the risk vehicles of the Vivriti Group. So Vivriti Capital is an NBFC. Now this NBFC has more than 4,000 crores of investments today, and it's backed by Creation Investments, which is a global private equity player, Lightrock, which is again a global private equity player, and TVS Capital, which is one of the leading domestic private equity players. And the second part, which is where I represent, is Vivriti Asset Management, where we are a specialized private credit player. So we operate only in fixed income asset class, and our goal is to make sure that we demystify and build this performing credit asset class, right? So we say that by our point is that what has been possible for 5 years through the NBFC vehicle should be available to all investors. Because if we've been able to go from start when demonetization got over, started from GST, went through the entire IL&FS crisis, Yes Bank crisis, COVID, all of that, and come out on the other end with less than 18 bips of loss in our portfolio, then there is something which is working right within the NBFC to which other investors should have access to, which is how Vivriti Asset Management is created. And we've had we've scaled over the last 2 years to having more than 2,000 crores of commitments, and our deployment is somewhere around 70-75% of that has been sort of deployed, right? So again, to sort of highlight the approach that we have, the first bit that we talk about is granular access, right? Ki concentration risk ko kam rakhna hai, right? Because that's where the alpha that I add as an investment manager will come out even more clearly. Because for example, अगर कोई किसी same point, right? किसी ने बोला कि मैंने बजाज फाइनेंस में पैसा डाल दिया, so I'm an amazing fund manager. You would not add that. You not give as much weightage as someone who's saying I've invested in Nifty index, underweight, overweight for 10 years, and I've managed to give a 3 or 4% alpha, right? So you would probably trust the second guy more with your own money later on. So that's what we mean. That's what we want to do through ensuring that there's granular access. Skin in the game, most of the funds that we launch have a subordination, which means that agar kuch galti ho jata hai, so for example, one of our products, assume that it has a 10% subordination. That means if there is a default, the first loss that happens is to Vivriti Capital, Vivriti Asset Management. So which means that our neck is on the line first, and this is why this is what we mean by skin in the game, and almost all our funds have this. The third based on innovation. Because this asset class is in itself new. यहाँ पे आपको product side में, asset side में, origination side में, risk management side में बहुत innovation करना पड़ेगा हर step में to be able to deliver what we do. Because अगर आप बोल रहे हो कि मेरे को 5 ही investment करना है, 20%, 25% sort of a credit risk point, and I have like 2 years to deploy this, तो इतना तामझाम की कोई जरूरत नहीं है. But if I'm saying कि मेरे को 10 investments करना है और मेरे को 5-6 fund chalana hai, so that you investors can choose your risk and return, that what you would like to participate, invest. Then every step needs to be having innovation, which is what we're doing as a firm, and that's what you will be seeing in all your products. And of course, the fourth bit on risk management, जो मैंने आपको highlight कर दिया है. Now, in terms of the innovation, if you see, India के पहला AA plus AIF debt AIF हमने launch किया था. Highest printed hurdle हमने launch किया है, which means that you would be getting most of the funds, regardless of the return that they give, वो आपको promise करते हैं. We are saying that we will deliver what we promise, and we have promised a higher return. So amortizing AIF with AA plus SO is even India's first, so that's another credit rating first that we've got. Diversified MLD fund, वो भी इंडिया का पहला diversified MLD fund हमारे पास है, and we've also managed to get a large development finance institution in India, one of the largest. It means it might be in the press soon, but the idea is that we've managed to get an anchor from one of the sort of pseudo government agencies to invest us a large amount. So in a way, revalidates the kind of governance we have, the processes we have, the risk management metrics that we follow. This I've touched upon this earlier, but broadly, we started with demonetization and all the way up to now 2021. But our promoters, and the founding team have had experience managing this credit risk through cycles even prior to that. So the whole 2013 to 15 ka taper tantrum, as well as the 2010 ka microfinance crisis, all of that has been, our investment team has seen all of that, managed all of that, and come across the other side reasonably better than most, right? Now, if we see today how our book stands, we are across financial services as well as non-financial services, split across multiple sectors. So the way we look at sectors is very granular. So we are present across 30 plus sectors. So the understanding that the franchise has is across more than 30 sectors. So it gives us a very clear vantage points to select the right assets for our funds, right? If I move closely just to our AMC, like I said, we've got more than 2,000 crores of commitment. The concentration risk, which I was telling about in terms of average exposure, today we are standing at less than 7% across our funds. Most other investment managers would not be having this. We've been able to achieve this because we singularly focused on making sure that this is kept to a certain desirable level. We have insurance companies, we have the largest banks, one of the largest, India's largest PSU bank is our investor. Top 10 family offices in India, most of them are either invested in us or are looking to invest. So today we've crossed, I think this number is a bit outdated, we've crossed more than 250 investors across funds. And the other point we wanted to highlight is that we've raised money both from domestic as well as international, right? So, and when you get international capital into fixed income in India, there are many more legs that you need to cross. And mind you, this is not just HNI money of NRIs. This is institutional capital also that we've been managed to get into our fund, right? All the funds that we, in terms of performance, all the funds that we have, the 7 funds, all of them have a certain hurdle assigned to them, and we've been able to meet all of the hurdles. We've not had even a single day of delay, forget default, in any of our investments till date. And the proof of the pudding, right, is when after you invest, the investment becomes lesser risk. जैसा वो same soap example plant I was explaining to you, आपने आज invest किया और 3 साल के बाद उसके पास 4 यूनिट हैं और वो सिर्फ और वो HUL के पास 200-300 करोड़ का बुक सप्लाई कर रहा है soaps. If that comes out and then the company gets rated, the company is able to raise bank financing at 9.5. That's a journey which you want to be part of. Even though you ended up coming and getting a 14 or a 14.5% return, ideally you want that to play out. So we track this by number of upgrades, right? So if we see, 8 out of the 36 of our portfolio companies for these funds which are actively raising money, they have seen upgrades post our investment. right? So that's broadly what I had to
Sure,
share
sure.
about the AMC in itself. But yeah,
So what we'll do is we'll open the forum for Q&A. So we have last few minutes to go before we conclude the session. So I would request if any of the investors has any question, please type in your questions in either chat box or maybe the Q&A box. Uh, so what we'll do is before we conclude, or some of them are typing the questions. So last thing is, uh, what are which are the sectors that you are positive on and you would be looking at lending money, and which are the sectors that you feel may not do well going ahead in next 2-3 years time frame?
right. So see, the way we invest is that we go behind themes rather than sectors. Now, इसमें मैं आपको सिंपल एग्जांपल देता हूँ. फॉर एग्जांपल, वन ऑफ द थीम्स दैट वी लाइक टू इन्वेस्ट इज क्लीन एनर्जी. नाउ इसमें मल्टीपल सेक्टर्स हैं. सोलार, विंड जो आप जानते हो, देर इज ऑफ ग्रिड सोलार, देर इज EVs, there is EV के लिए companies which service electric vehicles, and many new biogas. There are multiple technologies which are there which come under clean tech. Now what we do is, before selecting this theme, हम ये देख रहे हैं कि are companies which have been in this, playing this theme, and sectors operating in this, have they performed well historically? Answer should be yes. Second point is, do they have a lot of capital chasing them, right, or expected to chase them? Because यही है, we believe very much कि you can, you never want to be the good house in a bad neighborhood, right? You're okay being a median house but in a good neighborhood. So macro should be right. So making sure that there's enough capital chasing that, and then we say that, okay, does this fit with India's overall macro? So once these three things are broadly okay, then we move into that and we analyze the various sectors and the kind of deal flow that's there. So we go behind themes. So consumption is a theme that we are backing, because we think that even though the tailwinds are sort of moderating for consumptions in this period of volatility, given the fact that it's India's growth story. India's growth story is going to come only from largely led by consumption growth and investment as and when it comes and goes, but mostly the consumption growth, the private market, the market which we all are part of. So this part will continue to be growing in a secular fashion. Speed thoda aage piche hoga, but secular fashion. Clean tech. The third bit we are talking about is new economy. New economy ये चीज है जहां पे the same businesses which have been done over the last 20, 30, 40 years in multiple fashion, if you're able to do it a bit differently and earn much better margins, that is a sector that is a theme that we want to back. For example, sales and distribution में sales and distribution सदियों से चल रहा है, 100 साल से चल रहा है, right? But today there are companies which come in with a clear 6 to 8% profit margin and are using tech to solve the problem. तो ये वो वाला टेक नहीं है जो ओला उबर है जो 10 साल के लिए पैसा गवा करते हैं. ये वो टेक है जो बिजनेस मॉडल जो प्रूवन है उसको उठा के उसको टेक एनेबल रखती है एंड पहला दिन से प्रॉफिट बनाता है या पहला साल से प्रॉफिट बनाता है. दैट इज समथिंग व्हिच इज very, very ripe for a fixed income investor to take advantage of. And that's the third theme that we're targeting. The fourth theme is the undeniable truth in the entire bit of consumption is the fact that there has to be retail financial services growth. So the same theme which banks are targeting, we are also targeting, but we will target it through two modes. One is through lending to institutions which target the tier 3, tier 4 and rural sort of populations. The second bit is by lending lending through our funds to allied financial services. So not to companies which give loans, but मान लो कि for example कि ATM machine का operator या security guards providing to banks. These are all allied services that you do, right? So these are also important for retail financial services boom to continue. So which is why that's the fourth theme that we are having. So what we will avoid, I'll talk I want to stress on this is that we will be avoiding residential real estate because firstly we don't understand it as well. Our operating experience has not been in residential real estate, so jo hame itna nahi aata hai, we would not want to do it. Second is it has its own volatility attached to it, and everyone's an expert in this, so we feel that residential real estate is something we will not be doing. We will not be doing pure loan against share kind of transactions, like I said, because there what we are doing is that किसी के equity पे आप debt दे रहे हो, we are not very comfortable doing that, so we will not find that product in our funds. Our debt would be pure secured debt lent to operating companies is what our majority of our investments would be, so not doing last sort of transactions. Third bit is we will not be doing venture debt sort of transaction, right? तो वही वो जो tech वाला point मैंने बोला था, we will not be investing in an Uber, we will not, even though we know that वो 3 साल में default नहीं होगा, that's okay, because it's not a proven business model. It is an entity which is still in a very much a venture debt space for as far as we are concerned. Maybe NBFCs invest in funds, we won't invest in that. We will invest. So venture debt is something that's a third point that we will definitely not look at as part of any of our fund allocation, right? So ये हमारा broad no goes हैं. As an underwriting principle, हमारा first and the most difficult aspect to ascertain, जहाँ पे most गलतियां होती हैं, is governance of a company, right? कि not everything just doesn't look good on paper only, but also looks good in reality in terms of governance. So that in terms of no go criteria, एक तो ये sector point है जो मैंने बता दिया, और profitability का point बता दिया. Governance is the key differentiator. We spend an inordinate amount of time. Yeah.
So with that, we'll conclude the session here. It was a great discussion, great insights from you, Irfan. Thank you so much for joining the session today. And I also take this opportunity to thank all our investors who have taken the time out from their busy schedule and joined us today for the session. And probably we'll have one more session next week. So, and Irfan, before you leave, I wanted to request you. So what we are doing is we believe in educating and empowering our investors, and therefore we keep organizing these sessions. So we'd like to have a series of conversation with you, maybe once in a month, so that for next 2 to 3 months, so that we can dwell upon various aspects of credit AIFs.
Yeah, sure. I mean, it's a pleasure being here. Would have would be happy to discuss maybe more focused topics. Would be happy to share our views.
Yeah, thank you.
Yeah, most welcome. Bye bye.